You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is time once again. It is Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern. That means it's time for TWIFO. This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. Maybe we talk some crude, maybe some equities, maybe some ags, some metals, maybe some lean hogs. You never know what the heck is going to make it onto the show. That's why you have to tune in every week. My name is Mark Longo from the old OptionsInsider.com. Make sure you check out all the great stuff that's been added over there in recent weeks. Not just a shiny new coat of paint, but a lot of cool stuff under the hood there as well. It makes it even easier for you to find your favorite shows, listen to them, subscribe to them, share them, all of that good stuff. And, of course, if you listen live or after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. Joining me on the old program today, it was a busy couple of weeks for our buddy there, Mr. Sean Smith from Footsie. Just went through Russell Recons. I believe he's taken a well-deserved break. I miss him here in the studio because whenever he's in the studio, that means we always have delicious gourmet burgers usually as well. So he's not here. No burgers for me today, so a sad face on my front. Nick, our old buddy Nick from Quick Strike, also traveling there as well. But fear not, listeners, I am joined in the CME hot seat this week by our old friend of the network and kind of a new friend of this program, Mr. Russell Rhoads, the Director of Derivatives Research over there at the Tabb Group. And, you know, it's only appropriate when we have Russell on the program that we greet him with the appropriate music.
Now, Russell's Weekly Rundown.
How was that? Was that a blast from the past, sir? How you doing, Mr. Rhoads?
I'm tempted to just sit here and be completely silent for a second and make you just hang like, is he here? But I just couldn't do that to you. I'm doing fine. I'm on vacation this week, but I always will break vacation for you. I'm actually up in Wisconsin at Lake Geneva, and I love coming to Wisconsin because it's the only place I can find non-frosted blueberry Pop-Tarts, and I will save a pack for you. I know it's not quite the steak that you get from Sean Smith, but I will bring you some non-frosted blueberry Pop-Tarts back from
gourmet
my
burgers, Gibson
Wisconsin
steaks,
adventure.
And now non-frosted blueberry. I like the frosting. Isn't the frosting part of the fun of a Pop-Tart?
I don't like the frosting, but the only place you can find them is up here, man. I basically, it's kind of like when I could drive across the state line and buy beer being only 18 in the South. I have to drive across the state line for two things. One, to fill up my tank because it's
now you do.
$1 a gallon less.
They jacked it up here in Illinois.
Blueberry Pop-Tart.
It's funny you should mention Pop-Tart Arbitrage because I was just reading something about that yesterday, actually, about how, you know, there's all that retail arbitrage going on with Amazon. And apparently one of the big products that they sell in that are Pop-Tarts. Apparently there's a huge secondary market for Pop-Tarts. They didn't delineate why as to frosted or non-frosted, but I'm thinking what you're saying maybe gave us a little bit of a clue into why the secondary market for Pop-Tarts is so big.
I did not know there were. I can't believe I'm not a Pop-Tart arbitrage trader. That just totally mixes in with everything.
It might be the best business card ever. Pop-Tart arbitrageur.
Yeah. I'm adding that to my my Twitter description right now.
But yeah, I'm sure there's some Facebook groups out there and everything else that get into the nitty-gritty of Pop-Tarts. So do some research. You know, you're doing all this derivatives research. Clearly you're wasting your time. It's Pop-Tart research where the money is. Let's get into that research a little bit, sir. That is kind of your title over there these days, the Director of Derivatives Research. A lot going on in the world of futures options these days. CME had, as you might imagine, it was a pretty robust month for a lot of things across the board there in June. And CME options, no exception. ADV exceeding 5 million for the second consecutive month in June, 5.7 million contracts per day. That is the second highest monthly ADV they've ever had over there at CME. So June, not usually a rock'em sock'em robots type of month, but this year, all bets are off. We got trade wars, we've got real quote-unquote mini wars escalating there in the Middle East and everything else. So June, a little bit of a different outlier month. And that brings us to you, Mr. Rhoads. One of the reasons you're on the show, you like to do this cool thing over there at Tabb Group called your liquidity matrix, your options liquidity matrix. I just have visions of you dodging bullets in slow motion. Is that how that works, sir?
That's exactly how it works. I'm the Keanu Reeves of derivatives research. How's that?
Yes.
Talk about a guy that's having a resurgence. I need to have a resurgence as well.
Yeah, you need a Rhoads-assance like he's having a Keanu-assance these days.
Well, what I do is kind of an extension of what I did in my previous life, where you would have me on a different program. In addition to looking at the equity option space, I look at the option markets at CME Group. And, you know, when you start to think about how leveraged options on futures can be, on a notional basis, what happens at CME Group is very similar to what's going on across the board in the OCC options space. And this past month, like you mentioned, it was like the second month in a row where they did more than an average daily volume of 5 million contracts. About half of that was in the Eurodollar complex, either the Eurodollar mid-curve options or the straight-up old-school Eurodollar options. And I think it's the macroeconomic uncertainty combined with the wishy-washiness with respect to the market, trying to figure out what's going to happen or trying to play what's going to happen with interest rates throughout the rest of this year. I think that helped them tremendously.
I think all of us, and we touch on it on this show a little bit, but even still, we don't get to spend as much time on it as maybe is warranted. Just because, but you're right, the volume there in Eurodollars, it's just another beast entirely. You know, we talk gold, we talk crude, they do thousands, maybe tens of thousands, maybe if it's crazy, hundreds of thousands of contracts. But Eurodollars, you're talking millions of contracts. It's just a different beast. It's hard to come to grips with it if you're not that familiar with it.
And June of this year, it was like they average I actually, because it's such a big market, I divide up the Eurodollar contracts and the Eurodollar mid-curve contracts, which are a little bit farther out. And the Eurodollars by themselves, and these are interest rates, not euro currency. The average daily volume in June last year was just under 600,000. It was almost 2.3 million this past month, which I can't help but laugh a little bit when I throw those numbers out. The average daily volume on a regular basis for the year is about 1.2 million. So June was a huge outlier month. And, you look at what's going on at CME Group, and then you see that, like, I believe the OCC cleared volume was down about 6% year over year. I think it's really all about interest rates right now. And that lends itself toward trading the options on futures versus there's just not really a good interest rate option product on the other side of the equation.
Yeah, not unless you want to get into some obscure ETFs out there. You're right. There isn't really a lot going on out there.
You can do TLTs, but I don't really feel like because of how big the interest rate market can be, how big the bond market can be, I don't think anybody that really wants to hedge or speculate in size for that market can do what they want to do using options on those ETFs.
No, it's funny talking about rates on some of our retail-oriented programming here on the network. You know what the hot topic of discussion has been of late? You never would guess it. I'll just tell you. Box trades. Box trades are apparently hot. Even the big retail brokers, their clients are lighting them up. Can you imagine a retail customer wanting to trade a box? But apparently they are.
They want to make their 1.5% annualized over a month or something like that?
I guess. Just commissions alone, it's got to be onerous, let alone from a margin perspective for retail. So I know some brokers like Robinhood got burned on that trade and have actually recently stepped in to ban no more boxes on their platform. So it's everything old is new, everything old is hot again, and apparently boxes are having their moment in the sun. When someone suggested that, I kind of laughed at them. I said, who wants to talk about box spreads? Apparently everyone. I was wrong. So go figure.
10 years at the SIBO Options Institute, I got one question about box trades. And it actually came from somebody at OCC.
Yeah, that sounds about right. That should be what the interest in boxes is. But apparently nowadays everything old is new again. Well, as you're breaking down all these numbers, of course, listeners can find it all for themselves at the Tabb Forum, listeners. But any other things jump off the tape for you in your liquidity matrix, sir, while you're in between, you're dodging the bullets and learning Kung Fu?
Well, one of the things, I'm just starting this. I've only been at Tabb for about a year, so I'm really starting to pay closer attention to what goes on at CME than I used to.
Has it been a year already? Wow, it seems time flies.
Oh yeah, it's July last year. So things happen in the summer and we forget about them, especially in the markets. But it seems like every month a different market pops up into the most active options on futures market. Last month, I think it was corn. This month, or when I say this month, I mean June, it was gold. The year-over-year volume was up like 130%. I think it's just related to the price of gold breaking out a little bit, and we've beaten this one to death on this show and on the volatility show. Option activity in commodities will pick up if you get a big move to the upside or a big move to the downside, along with an increase in implied volatility, even with a big move to the upside in a commodity. And that's what we saw. But when you see an increase in volatility, you automatically seem to see an increase in volume. And the gold market went from doing around 50,000 contracts a day on average to well over 100,000 contracts a day back in June, and which came out of nowhere because, the price move kind of came out of nowhere as well. But earlier this year, looking at the two gold volatility indexes that we have access to, gold volatility was hitting an all-time low based on the history that we had there. So maybe that, and I even think that I might have been on one of the shows, not to pull a Mark Sebastian here and say, look what I did, but I think we were talking about, we had a discussion about how cheap it was to take a stance in gold a few months ago because the volatility was so low.
Yeah, that's been kind of a recurring theme, particularly on this program. For the better part of the last year is just, people always write into us saying, how much lower can gold vol go? The answer is usually not that much, but it can kind of linger in there. But B, it's so cheap, you don't want to sell it. And if you buy it and if you're deft, as my buddy Nick always says here on the show, it pays the rent. If you're deft at scalping it, it's cheap enough, and there is enough, people forget, there is enough movement in gold to make this small amount of volatility pay off. And so if you're savvy with it, you could certainly, he was a big fan of puts and futures, kind of doing them kind of one-to-one there on that trade, and then scalping pretty aggressively. And so gold's been one of these ones we've been talking about for a while. In fact, I think we have a listener question about that a little bit later, about are we in a new gold vol regime? So we'll have to see when we get to that. But since you're our guest, Mr. Rhoads, do you want to dive into a little energy first? There's a lot going on out there. You want to start there, sir, or you want to start somewhere else?
No, you can go. I'm going to let you guide. So,
well, that is why I get the big bucks.
You choose the market.
All right, well, we'll kick things off. A lot of things popping off these days in the crude markets. Kind of a 1-2-3 punch hitting crude and WTI right now. We've got, of course, the first punch coming with Iran, the increasing tensions in the Strait of Hormuz there, with Iran trying to seize a British tanker. The British saying, no, not so fast. So things kind of escalating there before they de-escalated a little bit. So that always ratcheting up tensions over there. We're also seeing a ratcheting up of a tropical storm into a hurricane. What is the name of this one here? Barry. I love these innocuous names of the hurricanes. Barry. Why would you flee if Barry is coming to town? Barry might probably be upgraded, might even be upgraded as we speak, into a hurricane that, of course, going to go straight after the Gulf. The Gulf accounts for roughly 17% total crude output here for the U.S., so that, of course, shutting a lot of that down, giving us another little bit of the second punch of our 1-2-3 punch to the bullish upside. And we also saw a significant decrease in crude inventories here in the U.S. So, of course, that supply side of the equation here in the U.S., always a big talk. So the supply down, we've got the hurricane coming, and we've got increasing ratcheting of the tensions in the Middle East. All of that combining for a nice 1-2-3 punch to give us a nice boost. Crude WTI back above the 60 handle for the first time in about 2 months over there. Come into showtime, we're just flirting with that mystical, magical 60 level at about 60.18 coming into showtime. It puts us up about 270 or about 4.6% net on the week. And after all this back and forth, this upside move of late has contributed to a little bit of vol coming off, and actually coming off pretty aggressively, off multiple points in all of the front portion there of the term structure out here in WTI. And it looks like we're seeing the lion's share of the volume coming in the SEP contract here, with the August contract here for WTI, 36.6%. With the biggest trade, let's see here, looks like we're at about a 60.18 coming into showtime. The biggest trade are the AUG 62s with nearly 11,000 going up. Puts that in perspective. We were talking about Eurodollars a little while ago, talking hundreds of thousands at a clip. WTI, a little bit different beast. 10,827 to be precise of the 62s. The 60s also pretty active, hot behind them, about 10,500 of those also pretty active throughout the week. The lion's share of both of them trading on Wednesday for both of those products. And then we fall off a little bit here to actually number 3. We're going to go out a few months. We're going to go out now. We're going to September, and we're going to the 50 put in September. So 50 even put going up 10,251 times. So a pretty active week kind of across the board. Upside, at the money, downside puts here. The lion's share of those actually going up pretty equally on Monday and Thursday, about 3,300 and 3,200 on Monday and Wednesday, respectively. Total about 10,200, slightly closing on the week. Of course, we don't have today's volume baked in there, so that could be a little bit of a different story. But still, a little bit of a closing action here on the 50 puts makes sense. Moving away from that strike, maybe the concern not as high out there in the downside for crude. Let's do a quick check here of the skew really quickly as well before we move on. Let's go out a little bit because I hate to look in the front couple of weeks for a skew. Let's go out about a month. Let's go out to this SEP contract. Let's see how the skew is looking out here. A week ago, the puts were leading the dance. They were 5.1% risk to at the money. This week, they're leading the dance even more so, pretty much doubling in terms of premium to the at the money, about 10% rich to the at the money now. And the calls, they were about 3% cheap, now about 6.3% cheap, again showing why moving along that skew curve why the vol is coming in and coming in so aggressively. We're moving into that call wing. The calls are cheap, hence the vol coming in. What you expect when you're moving along the skew curve there. Mr. Rhoads, I know you're watching these markets now, like energy and others, with new fascination. I know the energy vol is also, I think, a subject that's near and dear to your heart these days. Anything catching your eye out there in the energy markets this week, sir?
I'm surprised the skew is not steeper on the call side. That's the first thing that pops into my mind is, but you could record me saying that and have a little red button, and I wouldn't even have to be on the show because it seems like there's you just spent 2 minutes talking about all these things that should be pushing the price of oil higher, or at least getting people worried about higher oil prices. And then you look at the option markets, and it's telling you that we've got the Alfred E. Newman going on, that nobody's really worried about a big move to the upside in oil, and that's very much of a head scratcher in the current environment. I gotta take like a couple of months off and basically write a book of doing technical analysis using volatility and skew, because looking at the skew right now, even though we've got all kinds of danger in the world, it looks like the option market's giving you a nod and saying that maybe it's time to short crude. And it does anecdotally, from the time that I've spent watching this, I've never really quantified it as much as I'd like to, but from the time that I've spent watching this, it's always been a really good kind of, not necessarily primary signal, but once you feel like there's some resistance in place, if you take a look at the change in the skew over a few days, if you start to see it come down, it gives you a little bit more of assurance that maybe it's not a bad idea to go short.
Yeah, that's definitely showing maybe a little bit of bullish exhaustion here on this. I'm looking here across the full breadth of the term structure, and I can't find, outside of like the first couple of weeks, which are really just gamma contracts, right there you have about a smile. The calls and puts are kind of equally bid there because no one knows what the hell's going on in the next couple of days. But once you get beyond like a week or two, it's pretty much all bid to the puts. And there's not much love for the calls at all. So you're right. That is kind of fascinating. We have been moving kind of aggressively to the upside, so maybe that kind of exhausted some of the bullish love. But you're right there. It does seem like it's for the foreseeable future here, the market is pricing in not so much upside. And that's been kind of a bit of a narrative we've seen in the equity space the energy space for a while there, where there are a lot of headwinds against this market. These other ones are kind of near term. Longer term, things like global demand with the trade war continuing to go on, these are issues that are still unresolved. And that maybe, it seems in the last few spikes, has put a bit of a headwind on energy. And maybe the market looking at that again and saying, hey, maybe not a lot of room for this to continue to the upside. Let us know what you guys think. Meanwhile, let's keep on rolling into, let's go another area that's been moving a bit of late. And also kind of your old stomping grounds, Mr. Rhoads, which is equity volatility. Are you familiar with that topic? You know what I'm talking about there, sir?
I might have spent a little time in my life paying attention to it.
Someone, I won't say who, maybe used to call you the soon-to-be Dr. Vix.
Well, I'm still the soon-to-be doctor. I'm working on it. But
one of these days.
Not there yet.
One of these days, you'll be a doctor.
Yeah, I'm getting there.
But yeah, equity space has been interesting to watch of late. We're kind of in this kind of weird zone. Of course, the Powell put clearly in effect. We were talking about it on our news program here this week, listeners, and hopefully you guys have been watching. If you're watching things like the Powell testimony and you're not going over there to the Fedwatch tool, you're really doing it wrong. All these analysts, all these other people, they can watch the briefcases, they could read the tea leaves of all that. They could do that all they want. What the market is actually saying is what's shown here in the Fedwatch tool. And coming at it right now, just a couple of days ago, the market was pricing in pretty much 100%, about 98% probability of a cut in rates, and as a result, the market loved it. Coming into his testimony yesterday and now today, that probability has actually decreased. It's about 78.5% right now, and the reason it has is because they're pricing in much more aggressive cuts, actually. So that's a 25 basis point cut at about 78.5% probability right now. 21.5%, this went from pretty much negligible, sub 1%, to about 21.5% probability of actually a 50 basis point cut. So the market, at least from a rates perspective, liking what they're hearing here out of Powell and pricing in a much more aggressive cut, perhaps, than initially expected. We are 19 days and 23 hours away from the next FOMC meeting, so we'll know for sure there. But the market already pricing in like it's a done deal on 25 basis points and maybe even leaning towards 50. All that's given us a lot of bullish room to run here on the upside for the markets, even though net on the week, I'm looking here at the emini Russell. The Russell is actually off about 1.3% net here on the week. VIX itself coming into showtime is at about a 1275. Remember, we were off last week, listeners, so going back 2 weeks to our last show, that's actually off 3.5 points. Just shows how much the vol has come in, how much they were pricing in, waiting for the G20 summit. Then, of course, the Fed speech this week. All of that was priced in. Now a lot of that vol coming out of the marketplace, down over 3.5 handles from our last show 2 weeks ago. The volatility of VIX, ironically, it dipped down, then came back up. It's kind of unched to where it was. It was about an 87 last show. 86.5 right now. RVX, a.k.a. the VIX of the Russell 2000, at about a 16. That's down 3 points as well. So that spread widened out a little bit. That spread is now about 3.25 points. It's about half a handle wider than where it was this time 2 weeks ago. Mr. Rhoads, you still watch the ebbs and flows of things like Russell vol to the S&P and all that other fun stuff?
Not as much as I used to, but when I see big moves in the market, I tend to take a peek at what's going on over there. One of the things that I really want to, like on the whole list of things I'd like to backtest, and, if there were another person on the show with us right now while you two were talking, I'd probably run a quick backtest and tweet it because I used to do that every once in a while during the show. I'd like to, there's some recent instances of VIX gapping over a handle from one day to the other if you're just using the regular trading session. I would love to see what kind of follow through you get in the overall equity market when that kind of movement happens. And we've seen a few of those lately where we've seen such a hard drop in VIX. And you normally don't get a quick drop like you're describing, 3 points in just a few days. Typically, it's the other way around. So the velocity of the drop in VIX is really that's another one that's got me a little perplexed. But, last Friday, when we got the employment number, that's when, the equity market started acting like we might not see what we wanted at the end of the month as far as an interest rate cut goes. And even some of the brokers were saying, well, there's not 100% chance now because of the strong employment number and whatnot. But the only market that really seemed to act like that was the equity market. The rest of the markets kind of stood pat, and you still had a 100% chance of a cut priced in at the end of the day on Friday when you looked at the Fedwatch tool. So equity traders, maybe they never trade bonds, but they should pay attention to the Fedwatch tool.
trade equities, you don't have to watch anything else, sir. Just the equities. Why would you watch madness like fixed income?
The other stuff might tell you sometimes when equities is overreacting.
Equities overreact madness, sir. I don't believe it. I've never seen such a thing in all my many years here of watching such fun stuff. It is interesting to see, though, talking about diversions here, just how much. I mean, the S&P net up on the week coming into Showtime up about 0.25%, and like I said, the small caps, the Russell 2000 off over 1% this week. So a little bit of a divergence there going on. We talked about this before, and it's been fascinating to watch how, depending on where you're playing in the marketplace, you're having a very different experience. You have the NASDAQ typically leading the charts to the upside and then to the downside. The Dow kind of the laggard, and the S&P kind of the Goldilocks of the bunch, and then the Russell kind of doing its own thing, dancing to the beat of its own drum, off quite a bit this week as the rest of the indices are mostly in the green here. Speaking of in the green, what's been just lighting it up from a volume perspective, maybe you've been watching these as well, I don't know, Mr. Rhoads, are these micro E-mini futures that CME launched, a month or two ago now. They were kind of designed and geared to be really a more nuanced product for a lot of small retail to get out there. And man, they've been embracing these things en masse, which clearly shows it's not just retail trading these things, it's institutional as well. Over 20 million have traded since they've launched, which puts it far and away the biggest new product launch the CME has ever done. Obviously, it's a smaller size contract, so you got to account for that. But still, clearly there's interest. It's across 4 major indices, and the Russell have been doing pretty well as well in that mix. So a lot of interest across these. Are these ones that are factoring into your analysis these days, Mr. Rhoads, as you are broadening the purview of your derivatives research?
Well, what I've actually been doing with these things, and I wanted to give it a little time before I saw if we're getting any cannibalization whatsoever. But I know that there is a little bit of trading that's being pulled away from the big E-minis to the micros because of some fee differentials that are in there. However, this should not have any impact whatsoever on the options on the E-minis. So after we get a couple of months of data, what I want to do is kind of regress the options on the E-mini data versus the E-mini volume, and then see if there's a little bit of a disconnect over the last couple of months relative to what it would historically predict because we now have the micros. But I know that's very difficult for radio, but I think I explained it right.
No, I think you're right.
People are like, well, how do we know if they're pulling away from the big contracts at all? Well, you can make these anecdotal assumptions, but I think the best way to put the pen to paper on it, and if anybody else has a better idea, I'm happy to do the work. But I felt like that's the best thing that I can do. Also, I want to see if anything's being pulled away from the SPY, because if you're a retail short-term trader and you've been trading SPY, you really should give some serious thought to the micro options. Or the micro futures, excuse me.
Yeah, it makes total sense.
You get a lot more bang for your buck. These things, every time I check them, they're only a tick wide, and you can size up and size down very quickly if you want to. You can just double down on your bet, and it only costs you an extra $700 in margin if you're doing a one lot.
Yeah, favorable tax treatment, a lot of good stuff.
And I have been trading these things fairly actively.
Have you?
Just more out of fun to get a feel for them. But if I think we're overbought or oversold, because I'm very much of a fade trader, which is very difficult to be. It's a lot easier to be to do that with micros.
Yeah, the pain is not as pronounced.
Yeah, exactly.
Have you been noticing the spreads fairly tight in there? I mean, they're trading a lot of volume. They got to be fairly tight.
Yeah, no, it's always a one tick wide spread. Every time I've looked to trade them, the spread's been one tick wide. I haven't necessarily looked at the size because I'm not slinging around 2,000 and 3,000 lots. But
I thought you were doing 10,000 a clip.
Oh, of course I am. Just to take advantage of the lower fees right now.
Mr. Rhoads, go big or go home.
Yeah.
That's his trading philosophy. But yeah, it kind of reminds me of when the weeklies really came back into prominence a few years back, and how that very much changed the decay curve and how options perform and the volume, everything else. And maybe these micro E-minis could be having a similar impact on the future side of the fence. Maybe they're pulling in new traders. Maybe they're cannibalizing some from the existing stuff. They have to be doing some of the latter. You're right. There's so much volume going up, and seeing how that's going to affect the performance of these. It sounds like Mr. Rhoads. So this is why you probably regret coming on our show. So every time you come on, you end up leaving with more homework than when you came in, sir.
No, I like this stuff. I'm actually on the second page of notes of things to work on since I've been talking to you. We're only a little over halfway done here.
There you go. We'll see if we can add some more to that. Let's expand your product purview, sir. Talking about things that are freaking moving like crazy this week. Realize vol in the stratosphere. Got to talk the crypto, in particular the Bitcoin. We hit on it on Monday, but Monday to Thursday is like an eternity these days in the crypto space. We've seen huge swings, huge movements, huge volumes over there as well in all these different products as a result. Let me just pull up the futures so we can see exactly how we're looking here today. But yeah, the futures, Bitcoin in general, was off about 5%. It's been an aggressive, shall we say, 24 hours out here in Bitcoin. It ran up over the 13,000 level yesterday. I think 13,200 or so was the top, and then got clipped down to 11,000. All that in the span of about 24 hours. It seems like a lot of that heat to the downside started coming after Powell started talking up Libra during his testimony. Of course, the Facebook play for crypto, and that all of a sudden seemed like the bids were gone after that, and it really got crushed. Coming into showtime now, we're seeing the futures 11,825 over there at CME, so off about 500 handles, close to about 450 over there. So another aggressive shellacking, if not quite as bad. We're off the lows of the last 24 hours, but still off substantially from where we were just a day or so ago there. It's just the volatility out there has been extreme. I know on Monday's show, the realized 30-day vol of Bitcoin was at about a 125. I have to imagine it's at a similar level, if not higher, given the extreme moves we've been seeing of late. Volume-wise, looking right now, seeing the futures doing about 8,500 contracts in that front July contract, about 1,000 in AUG, and about another 600 or so in SEP and DEES. So, yeah, you're putting about 10,000 contracts on the tape. Remember, that's a 5X coins. You're talking 50,000 coins changing hands over there. Another interesting fact we've kind of noted on our shows this week is that, people like to watch in the crypto space. Mr. Rhoads, I know you like your new indicators. And in the crypto space, one of the big ones they like to look at is the dominance rate. How much of the market cap of all crypto is dominated by Bitcoin? And that rate has surged. So that kind of shows that as Bitcoin has rallied, and maybe that's come off obviously a little bit now, but as of yesterday, it was at 65%. That's the highest we've seen since December of 2017. And we all know what happened in December of 2017. That was the march to 20,000. That was the race to launch futures at CME and SIBO. A lot was going on, hot and heavy in the world of Bitcoin back in DEES of 2017. So the dominance rate now, it means Bitcoin makes up 65%, or at least it did coming into today, of all total crypto market capitalization. That shows that Bitcoin's been feeling the love. Some of the altcoin, not so much. So your ETH, your Litecoin, your Bitcoin Cash, all that stuff, kind of more mixed as a result. We talked about that on the show. We'll get into that more on Monday as well. But it's been fascinating to watch. Mr. Rhoads, is this yet another area of research you're going to be adding to your notepad here as you expand the purview over there?
Part of what I do at Tabb is keeping up with the crypto space, and there are we've got the futures at CME Group right now. I keep knocking on the door over there and asking them when they're going to launch the options on futures, because I think a lot of people really want those. But what you're seeing in the CFTC and regulatory world is you are actually seeing some competitors to CME getting CFTC approvals to offer crypto swaps, and it appears that over the second half of this year we're going to see an expansion of, for lack of a better way to put it, regular money management institutional type firms having the ability to get exposure to cryptocurrency, which is something that we started hearing rumblings about that in August of 2017, and we know what happened to the price of Bitcoin over a 4-month period leading up to the launch of the futures at SIBO and CME Group. I'm wondering if we're going to get another type of rally like that, if we've started to see the early stages of that. But on the other side of it, the Jerome Powell stuff, when I read that, my thinking was that should be good for Bitcoin. Libra is going to be a competitor to Bitcoin with a bunch of big global players. And if they're talking about this being a potential risk to the financial system, but he says Libra and not Bitcoin, wouldn't that be positive for Bitcoin?
I guess the notion that it's a competitor, anything that's a competitor, right, is immediately bearish.
I just felt like it should go the other way when I heard Powell, and then I went back and read the headlines, and when I did that, I'm like, well, why is this bad for Bitcoin? I still don't, I'm not a news trader, and thank God I'm not.
Well, it's a good thing you're trading those micro futures then.
Exactly.
Because nothing happens in minute increments in those at all that you could maybe want to pay attention to. But yeah, you're right. That's something I've been beating that drum with CME. I've asked Tim McCourt many times on this show when we're going to get the options. It seems like the tea leaves they just announced they're redoing their ETH reference rate. So it seems like the tea leaves are pointing more towards maybe an ETH future coming first before we see options. But I'm with you. I mean, look at the swings we had in this freaking thing from 20,000 down to 3,000 over a year and a half, then from 3,000 up to 13,000, 14,000 in the span of a couple of months. How nice would it have been to have an option on there? And I know they exist. They exist on other venues out there, OTC, and U.S., non-U.S. clients can trade them. U.S. people have to have VPN. But how nice would it have been to have an option on a listed, regulated exchange here in the U.S. that people could actually trade without using a VPN? How cool would that have been, Mr. Rhoads?
And beyond that, how cool would it be if we could have a Bitcoin VIX? That's real. It all comes back to my girl, VIX.
Yes, well, there are some players in that space now, the folks at T3.
But really, how cool would it be if we could have something that anticipates the volatility and I don't know. It would be kind of fun just to get an idea because of the forward-looking nature of volatility indexes and skew. Like we talked about a little while ago about the energy market, to have something like that in place for the crypto market. I would love it.
The closest approximation to that now is, I think, what the T3 guys have done. Of course, they created spikes, and they use that similar methodology to create a bit vol index, and they price that off of the OTC options. So it's interesting. It is out there. I'll have to pull up a quote and see what you're making me think about it now, sir. I'll have to pull that up and see if I can get a number for it. Screen really here. That makes more sense. 115. 115 is the bit vol right now, which is up about 1.5%, and that is not quite the high. The recent high was out there. Looks like 135 on June 28th. Things are, as you might imagine, pretty frothy out there in crypto vol land. Let's see. We got some questions to get to. I'll leave it up to you, Mr. Rhoads. Do you want to finish up with all questions and do some movers and shakers? Or do you want to hit one more maybe product category first?
Let's do questions. I'm feeling sharp today.
All right, let's do it then. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the portion where you give us your questions, your comments, your emails. I would say your tweets, but looks like Twitter is actually down, Mr. Rhoads.
I was getting ready to ask you if your Twitter is down. Something. Your producer asked me why I wasn't tweeting during the show, and my response, I was like, maybe it's because I'm in Wisconsin and they've shut down Twitter, but it looks like it's shut down everywhere.
So forget about other leading indicators. Twitter's down. The market's going to start crashing now. We're done. We're in a tailspin. The market lives on Twitter now.
I know. I can't function right now until the Twitter comes back up.
I could probably tell even through the audio line here that you're getting the shakes right now with no Twitter.
I don't know how to function.
Well, tell you what, I will give you the next best thing. I will give you some Twitter feedback before it all went down. We like to ask you guys questions a lot as well, listeners. And we asked you guys this week, equity markets at least hitting new highs, equity vol eroding. We said VIX cash below the 13 handle these days. So where are you guys looking for your vol fix these days? Gave you 4 category choices. Energy, so it could be WTI or whatever you like. Maybe if you like USO, we don't judge. Somewhere in the energy. Metals, so it could be gold, could be silver, whatever you like out there. Maybe you're a palladium man. We don't judge. Crypto, certainly a hot area for, it could be Bitcoin, it could be ETH, whatever you like. We just want to give you categories. Or you're sticking with what brought you to the dance. You're sticking with your index vol. It could be your VIX or your spikes or your VXX, whatever you like to sling out there. I had numbers. I don't have the most recent, obviously, because Twitter has failed catastrophically. But Mr. Rhoads, if you have a choice, let us know what it is. And then B, more importantly, what do you think our audience is voting for? And I'll tell you what the numbers were right before it all went down.
I just from what I've seen that's going on, I think gold might be kind of fun to play around with. News-wise, I wouldn't be surprised if people say energy.
Yeah, I was thinking that as well. And again, this was early voting because this poll only went live a little bit before our option block program. But the early voting had actually 50% was in the metals, sir. 50% of the love coming in the metals. And then there was no love for crypto. And then about a third for the indices and the rest in energy. So energy was like a distant third. But again, that was early voting. These things swing. It's got a couple more days to go. So listeners, I would say get on over to @options on Twitter, make your voice heard. Hopefully by the time you're listening, if you're listening on the podcast, that it's all fixed by then. We'll see. But this is a categorically bad development for all the FinTwit out there who loves to just live and trade on Twitter. Let's get rolling and see if we could just distract you from your pain for a little bit here, listeners. Let's go here to CLDD. He wants to know, how do I read this Fedwatch tool? I just had it up and I pulled it down. Listen, I'll pull it back up just for you, CLDD. Here we are. No, that's the futures. Let me go to Fedwatch. But, I wish I had Nick on right now because he actually built this tool. So he could tell you specifically how it goes. Next time he's on, I'll make sure I have him do a rundown of it for you. But effectively, listeners, just type in CME and Fedwatch into your browser. Let the Google machine take you where you need to go. You'll see up top there's an array of different meetings up there. So, the September, right now we're at July 31st is our next meeting. So that's where you should be clicking on. Make sure you didn't click on the wrong tab. You can go out to a couple of years, and that's going to give you some weird probabilities. And then effectively what this is showing you, you're going to see a nice little bar graph here with 2 bars, effectively. And right now it's showing on the bottom, it'll also show you what the target rate is. This is obviously in basis points, so don't get confused by the nomenclature. This is in basis points. So right now we're in this range of the 225 to 250 kind of basis point range. That's the current rates right now. What they're pricing in is effectively a 25 basis point cut here, and that's what is showing you that probability of that big bar on the right, 79.6. It has ticked up since we were talking about it last. So it's almost 80% probability of a 25 basis point cut, listeners. This is at the next meeting. And then next to you see that little column. That column was non-existent a couple of days ago. It was only about 1%. Now it's up to about a 20.5%. That actually has come down a little bit, it seems like now. So new discussion, new analysis has decreased the probability of a 50 basis point cut and increased it a little bit of a 25 basis, which is obviously more measured type approach. That's what you're seeing right there. That bar graph showing you, it can be kind of confusing. Oh, where does it mean current would stay the same? Nope. What that shows you, that 200, 225, that represents effectively a 25 basis point cut. And that next bar next to it around the 200 level represents a 50 basis point cut. So that's what you're seeing. And those numbers are showing you are just straight probabilities. So don't get over your head. Don't get confused. Just look at those bar graphs, and it will give you a lot more info than you can. You can spend hours pulling this yourself in the marketplace. So just go to the tool, and it'll do it for you. Mr. Rhoads, do you ever use this tool in your analysis, sir?
I use it in my analysis. I always use it to answer the question, what's the Fed going to do? And I use it when I'm teaching the young minds at Loyola University in the finance classes to basically show them how the market prices things in and how you can, at least in this one case, you can figure out what the market is predicting, and then I explain if you have a different opinion than the market, that's when you do a trade. But also I tell them, when you get your first job and people start kicking around the Fed, bring this up. It'll make you look smart at work. Because it is a great tool, and something that I just noticed playing around with it when you were talking, I had never noticed. There is a historical download tool. You can actually download some data and see how this thing has behaved leading up to different numbers. I have now 3 pages of things to play around with and work on going forward. No, this is awesome.
I can say I could see your ears perking up the second you saw that. See, we give you homework, but also we arm you with more data, sir, to help you do that homework.
No,
so
they have added some things to this.
Yes, they have. They revamped it.
Yeah.
And that was what Nick and his team did. They went in and revamped the tool a bit. And I'll have to ask them if they added that historical download. In which case, they'll definitely have a fan in Mr. Rhoads. Let's keep going. We got time for a few more here. 787 West wants to know, I like the movers and the shakers, but you only do them for futures. In fact, we didn't even get to do them today. Is there a futures, options, movers, and shakers report as well? What he's referring to is, of course, typically at the end of the show, we'll stop for a little bit of looking and seeing what's lighting up the markets. What are the biggest movements and movers, I should say, in terms of over the past week in pure underlying futures. And if you do this in cmegroup.com/TWIFO, listeners, just go into the quick reports, go into the market scans, change your settings to 1 week, and you'll see exactly what we're looking at here. Let's see. Let's do our top 5 to the upside. We see number 5 is rough rice with about, where are we at? About 3.5%. Number 4, heating oil, up about 3.7%. Let's see. No, actually, 3.7% is for the rough rice, and then heating oil is up about 3.8%. Then we've got Brent up 4.08%, iron ore up 4.6%, and WTI taking this top spot. That's why we had to talk about this week, up over 5%. To the downside, we've got number 5 here, the emini Russell 2000, off about 1.4%. So again, talking about a little bit of a divergence there amongst the equities. Number 3 is the S&P Mid-Cap 400 E-mini, not an index we talk about a lot, off about 1.4% as well. Then we've got the Ultra out there in the fixed income, off about 1.6%. Lean hogs off 7% this week. Bad week for the hogs. And number 1 to the downside, lumber off 7.5%. But he's asking, Mr. Rhoads, is there a futures options movers and shakers report as well? We don't have one queued up here for now. I'll have to talk to Nick and his team about making one of those available in Quick Strike for you guys. But in the meantime, Mr. Rhoads, you kind of did this homework for them. You did your top 10 options on futures for CME. Granted, it's a year-to-date thing, but maybe you want to break that down for our listener. Maybe that will ease some of their pain here, Mr. or Mrs. 787 West, sir.
Well, I'm thumbing through to get to that page on the Options Liquidity Matrix. I do rank top 10 average daily volume in the month, and then also do a year-to-date one. And it's typically a lot of the same names. The top 10 tends to be dominated by, top 3 are interest rate, and then you get the E-mini S&P 500. The monthly one is the one that changes around a little bit. I mentioned that gold popped in there this month. Corn popped in there last month and actually stayed in the top 10 for the second month. I wouldn't be surprised if that one sticks in there again. A lot of people, you're talking about the hurricane hitting the Gulf Coast. When the hurricanes hit the Gulf Coast and the Mississippi River floods, they stop barge traffic. And that always provides a boost to corn. So that's something to keep an eye on as well. And I'll bet you that we continue to see increased option activity in corn again in July, like we have in May and then in June. But I'm not doing I think maybe he's asking for something that tells you about each of the individual, like picking out the individual options. I do it by underlying as opposed to that way. I can run through them real quick. Yeah, it was, and I'll do for June. It was Eurodollar mid-curve 10-year notes. the emini S&P 500, then the 5-year notes, corn, crude oil, the 30-year bond, COMEX gold, and natural gas were the top 10. And all of those saw a big increase in, a lot of those saw big increases in June to June volume. The Eurodollars, the volume was up almost 300%. The 5-year note, the volume was up almost 50% on a June to June basis. And as we mentioned, gold was up like 130%. When you start looking at the year-to-date ones, it really stays very consistent, especially once you get about 6-7 months into the year, because it starts to take a really big month to move the needle on average daily volume. Like gold had a really good month in June, but it's not one of the top 10 year-to-date, top 10 average daily volume for the year-to-date. It'd take a couple of more great months for it to pop in there.
Speaking of gold, let's bring it on home. On this question here, this is from Anthony, just Anthony, and he wants to know, are we in a new volatility regime for gold? We didn't get a chance to dive into the metals. Let's do a quick hit on the metals here. Gold come into showtime, up about 9 handles, so about not even a little more than 0.5%. 9 handles north of the 1400 level, though, so that puts us north of that, one of those magical, mystical lines everyone likes to watch, which is, of course, 1400. Used to be 1300. Now everyone's watching 1400. So we're staying north of that, of course, as a result of some of the recent testimony and movement out there in the broad rates and equities markets. This upside has vol coming in quite a bit, actually, here, which is, if you've been paying attention to the gold market, you know it's kind of par for the course. Whenever gold vol gets a pop, and it has had a pop of late, it tends to come back off again. The front portion of the futures here, the front portion of the term structure off several points here in vol, about 12.5 or so, looks like where we're looking right now. And it gets even lower than that, down to like 12, 11.90 as you get out later in the year into next year. Those are off about a point or so. So it seems like a lot of that near-term gold love from a vol perspective, Mr. Anthony, has been a little bit short-lived. I'm also looking here, Mr. Rhoads, at your old friend, Mr. GVZ, and that's come off quite a bit as well. That's, of course, the gold VIX at about a 13.5. For some reason, my chart here is not playing ball with me to show me the rest of the year. But Mr. Rhoads, I know you're a lover of these. I think last time you were on, we kind of talked and bemoaned the premature death of products like GVZ. Have you been watching it of late, and what do you have to say here for our friend Anthony? Are we in a new vol regime, or is it kind of like all gold vol spikes? They're short-lived, and then it kind of goes back to not much? Well,
the long-term average for GVZ is around 20 or so. Actually, I think the long-term it's a little bit higher than that of VIX. And it spends more time in the upper teens and the lower 20s. The move that we got over the past few weeks only got us up to about 17 or 18, which even if we moved to that level and stayed around that level, wouldn't really be a regime shift. A regime shift, I think, would be something where we stick at least above 20, probably in the middle 20s, and hover around there for several weeks at a time. Maybe Bitcoin taking over as the new gold. Maybe that means that we have to reassess what is actually a different volatility regime for gold volatility. But it didn't even get to a level where if it had stayed, would have been a shift to a higher volatility regime, at least in how I think about it.
Yeah, I have to agree with you, sir. I'm looking here. I finally got my charts to play ball here. And yes, I mean, gold vol, we've talked about on the show many times, was pretty much in the proverbial toilet for the better part of the last year, if not two. GBZ was in a similar level, in the single digits for much of this year. So the recent move, I could see why you would think it was dramatic, because it was. We saw it go from in the 9s up to GBZ at least hit a 17 ever so briefly, so nearly doubling, but that was very short-lived. It kind of came off that again. We're at about a 13 now, so we've already come well off those highs, so we're kind of in the middle of that near-term range. But I tend to concur with you, sir, that, it doesn't seem like it's been enough to get us into a new regime, which would be, you're right, into the 20s, something along those lines that's systemically more and higher volatility. It seems like at least from these recent indications, are going to pretty much drift back down to where we were. But it would be nice to see a little bit more life in gold vol, I'm not going to lie. So even though whenever I say that on the show, I'm always rooting for a little bit more gold juice, because I know a lot of you guys like it, a lot of you guys trade it, a lot of you guys watch it. So to have a little bit more vol out there is not a bad thing in the gold space. Unfortunately, listeners, that music means it is time to draw to a close this epic journey through the world of futures options. We touched on it all this time. We touched on some rates, got a deep dive into equities, did a little bit of metals there at the end, did some crude in the middle there, even got in some crypto, all of the above. Your questions about a bunch of different stuff. Keep those coming. We love to hear from you guys. Like I mentioned, our buddy Sean traveling this week. If you want to learn more about the data, the recon, all that good stuff, FTSE Russell is the place to go, ftserussell.com. Give him a follow on Twitter as well, at FTSE Russell. A lot of good data coming out there throughout the week as well. And, of course, our buddy Nick and his team over there hard at work at things like the Fedwatch and everything else. If you want to kick the tires and light their fires on their platform, quickstrike.net is the place to go, QUIKSTRIKE.net. Kick the tires, light the fires. Tell them you heard about them on TWIFO. That'll bring a smile to Nick's typically curmudgeonly face. And of course, last but not least, Mr. Rhoads. People want to check out what you have cooking over there, your liquidity matrix and everything else. Where should they go? What should they do, sir?
Oh, just tabforum.com. Before you do that, you got to register, but it's 100% totally free.
It's free, so they can't.
I know it's behind a wall, and I'm letting everybody know that ahead of time.
It's not a paywall, though. It's just a wall, so you can climb
it. Wall.
It doesn't cost you to climb the wall.
It's a give me your email address wall.
Yes, there you go. So give him your email address, but look what you get in return. You get all this delicious info and juice, and you got. I'm waiting once Twitter goes back up, Mr. Rhoads. I'm waiting for you to tweet out a picture of you as Neo in the Matrix, and then our conversation here will be complete, sir. Dodging some bullets as you're also calculating options liquidity. How does that sound?
That sounds wonderful. I can handle that one for sure.
All right, then.
I'm really upset about the Twitter.
Yeah, I could see you shaking just here across as we're doing the show here. You're an addict like many out there, and without the Twitter machine working, that's a deep blow to you. So we'll have to get off before all that is fixed. But we'll be back with you soon. We'll be back here tomorrow. Join us live 1 p.m. Central, 2 p.m. Eastern for some volatility views. Otherwise, we'll see you back here next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered. With market data reports ranging from open interest to the term structure of volatility, QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. TheOptionsInsider.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.